Good morning. Okay, today I shall be passing journal entries. So in the previous class, there was some mistake in the question. So I am doing this problem again. Okay. So take down the question. Journalize the following transaction in the books of Ramesh. I had written here Himanshu. Change it to Ramesh. Okay. December 1st. In the previous problem, I had written here as Himanshu. Now, change this to Ramesh. Okay. First transaction. December 1st, Ramesh started business with cash rupees 50,000. 50,000. Next, December 3rd, purchase goods for cash, rupees 7,000, rupees 7,000. December 5th, sold goods for cash, rupees 5,000. Sold goods for cash, rupees 5,000. December 5th. See, this transaction I had left. I had left this transaction in the previous question. Okay, in the last question which I had solved, I had left this transaction. So I want you to rewrite this, write this transaction. December 5th, purchase goods from Mohan on credit rupees 4,500. And in the previous sum I had given date for this transaction as December 12th. It is not December 12th, it is December 5. Again December 5. On that same date, many transactions can occur in the business. Okay. So on the same date, one more transaction. So December 5th, purchased goods from Mohan on credit rupees 4,500. Okay. Next is December 6th, sold goods to Sohan on credit rupees 5,000. On credit rupees 5,000. Next, December 7, paid wages rupees 4,000. Next, December 10, received commission rupees 2,000. Next, December 10, again December 10, paid salary rupees 2,000. Next, December 12, goods returned by Sohan rupees 1,500. 1,500. Next, December 18, goods purchased, December 18, goods returned to Mohan rupees 1,000. Next, December 21st, cash received from Sohan rupees rupees 1200, rupees 1200. Next, December 25th, purchased furniture from Deepak, rupees 5,000, rupees 5,000. Okay, now I got the board. So this was the transaction which I had forgot to write in the previous problem. Okay, so purchase goods from Mohan on credit rupees 4,500 and the date of the transaction is December 5th. Okay. So write down journal entries in the books of Ramesh. Write the format: date, particulars, LF, debit and credit. This is the format. Okay. Now let us start with the first transaction. What is the first transaction? First transaction is Ramesh started business with cash rupees 50,000. Now Ramesh has started business. So with the help of modern approach, I'll solve the sum. Okay, Ramesh started business with cash rupees 50,000. So under modern approach, with the help of accounting equation, I have to solve the sum. I have to solve the problem. Modern approach. Okay, capital plus liabilities is equal to what? Is equal to assets. Okay, so the rule for assets is increase should be debited, decrease should be credited, and for capital and liabilities the rule is decrease should be credited, increase should be debited. Okay, so decrease should be credited and increase should be debited. So first transaction, Ramesh started business with cash rupees 50,000. Ramesh, he has started business with cash rupees 50,000. So what is happening? You have to record all the transactions from the viewpoint of the business here. So cash is coming into the business. Take aspect is cash. Business is taking cash. You take up any transaction in the business, it will have how many effects? Two effects. It will have two effects. Take effect, give effect. What is the take effect? What the business is taking? Cash. Who is giving this cash to the business? Who is giving? Owner. Owner is giving what? This capital to the business. Owner is giving what? Capital. This is the take aspect. Business is taking. This is the give aspect. What the owner is giving? Capital. What the owner is giving? Capital. So, cash is the asset. So, I have written this below. What? Below the assets. Cash is the asset. Increase in asset. So, owner, he has invested money in the business. He has started business with cash rupees 50,000. So my cash balance is increasing. Cash balance is increasing. Increase in asset should be what? Should be debited. Increase in asset should be debited. Okay. And here what is happening to my capital in the business? My capital is also increasing. What is happening to my capital? My capital is also increasing. Increase in capital should be what? Increase in capital should be here. Decrease. See, for capital and capital plus liabilities are equal to assets. And increase in asset should be debited and decrease should be credited. And for capital and liabilities, the rule is similar. Increase should be different. The rule is different. I'm sorry, the rule is different. Increase in capital and liabilities should be credited and decrease should be debited. Right? Now, what is the accounting equation? Capital plus liabilities are equal to assets. So, what is the first transaction? Ramesh started business with cash rupees 50,000. Ramesh has started business with cash rupees 50,000. So, what is happening here? My cash balance is increasing. What is the take aspect? What the business is taking? Cash. What the owner is giving? Capital to the business. Take up any transaction, it will have two effects. Give effect, take effect. What the business is taking? Cash. Who is giving this cash? Who is introducing this money into the business? Owner. I cannot write the name of the owner. What he is introducing? Capital. What he is introducing? Capital. Because under the concepts of accounting, business and owner are two different persons. Okay, two different entities. Business is different and owner is different. Okay, so when he introduces money into the business, okay, that means it is a capital to the business. I cannot write the owner name here. So here, increase the capital balance is increasing in the business. Increase in capital should be credited. Increase in asset, cash is an asset. Increase in cash should be debited. So, what is the journal entry? Cash account debit. What is the date of the transaction? December 1st. Okay, December 1st. Cash account debit. Cash account debit to capital account. To capital account. What is the amount? 50,000. 50,000. 50,000. Okay, so I have to write the narration. What is the narration? Business started with cash. Business started with cash. Okay, business started with cash. So this is the narration. Okay, now this is according to what? This is according to the modern approach. Now let me do this with the traditional approach. Okay, and let me explain you. You will arrive at the same answer. Any methods you can follow. Any other methods you can follow. Say traditional approach. According to traditional approach, so what is happening? Cash is coming into the business. Cash is coming into the business. And cash is the take aspect. And what the owner, who is giving this cash to the business? Owner. Owner is giving this cash to the business. So whatever money which the owner introduces in the business, it is called as what? Capital. The owner, whatever he introduces in the business, it is called as what? Capital. Okay, it is called as capital. Owner is introducing capital into the business. Okay, now here, see, this is the give aspect. Owner is giving what? Capital. Cash is the take aspect. Business is taking. So, owner is a person. Person. So, persons, for persons, which account rule? Personal account rule. Personal account rule. What does personal account tells? Debit the receiver. Okay, debit the receiver and credit the giver. This is the rule. Okay, and cash is asset. What is cash? Cash is an asset. Okay, for assets, which account rule you will follow? Real account rule. What does real out. Debit what comes in. Okay. Credit what goes out. Okay. Now here, what is happening? See, debit the receiver, credit the giver. Owner is giving what? He is giving the capital. He is the giver. So what I should do? I should credit what? Capital. He is giving what? Capital. He is not receiving anything. He is giving. So credit the giver. So I will credit what? Capital. Credit capital to capital account. And here, cash is asset. What is the rule? Debit what comes in, credit what goes out. So, think from the viewpoint of the business. Cash is coming in or going out of the business? It is coming into the business. So, I will not consider this credit transaction. So, what is happening? Cash is coming in. So, debit what comes in. Whatever comes in, you should debit according to this rule. So, I will debit what? I will debit cash. I will debit what? Cash. I will credit what? Capital. So, cash account debit. Always to start a credit transaction, you should leave some space and then you should start with 2. 2 refers to what? Credit transaction. 2 refers to what? Credit transaction. Okay. So, any of the methods you can follow. Either traditional method or modern method. So, even if I solve this problem with the help of traditional method, I will arrive at the same answer. Okay. So, this is. Now, moving on to next transaction, second transaction. Okay, what is the second transaction? Second transaction is purchase goods for cash rupees 7,000. Business is purchasing goods for cash rupees 7,000. So what is happening here? Business is purchasing goods for cash. It is purchasing. So what is happening? My goods balance is increasing. My goods is increasing. Goods are my assets. Now business is purchasing goods for what? On cash. On cash. So goods is the take aspect. What is the give aspect? Cash. What the business is taking? Goods. What the business is giving? Cash. Take up any transaction in the business, it will have how many effects? Dual effect. Take effect and give effect. So this is the take effect. This is the give effect. Okay, so give effect. This will result in what? Decline of cash. Business is purchasing goods for cash. So what is happening to my cash balance? My cash balance is decreasing and my goods balance is increasing. And my goods balance is increasing. Okay, so I cannot write goods here. Instead, what should I write? I should write the event name. I should write the event name behind the goods. Okay, goods are categorized as purchases, sales, purchase return and sales return. Goods are categorized as what? Purchases, sales, okay, purchase return and sales return. So, here what is happening to the goods? You are purchasing goods. So, what will I write here? Purchases. What will I write here? Purchases. So, what is happening to my purchases? It has increased. It has increased. Okay. So, both are assets. Purchase of goods is also an asset. Cash is also an asset. Increase in asset. My purchase of goods is increasing. Increase in asset should be what? Should be debited. Okay, and decrease in asset. My cash balance is declining. Decrease in asset should be what? Should be credited. Should be credited. So what is the general entry? What should I debit? Purchases. So December. What is the date of the transaction? December 3rd. Purchases account debit. Purchases account debit to cash account. To cash account. What is the value of the goods which is being purchased? It is how much? Rupees 7,000. Rupees 7,000. Always to start credit entry, I should leave some space and I should start with what? 2. 2 refers to what? Credit. Okay. So what is the narration? Goods purchased for cash. Goods purchased for cash. Okay. So this is the narration. And according to moderate traditional approach, let me solve this. Okay, according to traditional approach, how will we solve? So let's see, in this transaction, purchase goods for cash. So what is happening? Goods are coming in, cash is going out. I cannot write goods here. I should write the goods are categorized as purchases, sales, purchase return and sales return. Whatever is appropriate, you should write here. What am I doing? What my business is doing here? Purchasing goods. So I will write what here? Purchases. Purchases. Okay, purchases of what? Goods. So goods are assets. Goods are what? Asset. Okay, cash is also what? Cash is also an asset. Which account rule? Real account rule. What does real account tells? Debit what comes in, credit what goes out. What is the real account rule? Debit what comes in. Okay. Credit what goes out. Credit what goes out. Okay. So here what is happening? What is happening here in the business? What is coming in? Purchases. So what should I do? I should debit. Whatever comes in, how I should deal this? I need to debit. Okay, I will debit this. And even for cash is also, yes. Which account rule you are supposed to follow? Real account rule. Debit what comes in, credit what goes out. So what is happening to my cash here? It is going out. So what I should do? I should credit cash. So credit cash. So what is the journal entry? Purchases account debit to cash account. To cash account. So this is the journal entry. Okay, now moving on to the third transaction. Now moving on to the third transaction. Third transaction. It is December 5th. Sold goods for cash rupees 5,000. Sold goods for cash rupees 5,000. Now business is selling goods for cash. So what is happening? My cash balance is declining. Business is balance. Okay. So sold goods for cash. My cash balance is increasing. Business is selling goods. When it sells goods for cash, what happens? It will receive cash. What is the take aspect? Cash. What is the give aspect? Goods. Goods. Okay, I cannot write here goods. What should I write? What am I doing with goods? I am selling the goods. So what should I write here? I should write sales. What should I write here? I should write sales. Okay. So because of sale of the goods, what is happening? My goods balance is declining. What is happening to my goods balance? It is declining. Okay. So it is declining. So which account here? For assets, increase in assets should be debited, decrease should be credited. Increase in assets should be debited and decrease should be credited. So here it is increasing. Cash is increasing. So what should I do? I should debit cash. And what is happening to my sales? My sales is, my goods is decreasing. My goods balance is decreasing. Goods are also asset. I have written the reason here just. So goods balance is decreasing. So decrease in asset should be credited. Decrease should be credited. Increase should be debited. Okay. So what is the journal entry? December 5th. Cash account debit. Cash account debit to sales account. To sales account. What is the value of the goods? Rupees 5,000. Rupees 5,000. Narration. Goods sold for cash. Goods sold for cash. Now let me explain you this passing of journal entry with the help of traditional approach. Okay, with the help of traditional approach. How? Under traditional approach, there are three golden rules: personal account, real account, and nominal account. Now, here business is selling goods for cash. What is coming in? Cash. What is going out? Goods. Okay. So I cannot write goods here. I should write the name. Okay. So what it is? What is the event name? Sales. Sales. Okay. Cash is a asset. Goods, sale of goods is also a asset. For assets, which account rule I have to follow? Real account rule. What does real account tell? Debit what comes in? Debit what comes in? Credit what goes out. Debit what comes in? Credit what goes out. Now cash, I am selling goods for cash. Cash is coming in or going out? It is coming in. So what should I do with the cash? I should debit. I should debit what? Cash. So I will write here, debit what comes in, credit what goes out. Okay. Sale of goods. Goods is an asset. So what is the rule? Real account rule. What does real account tell? Debit what comes in, credit what goes out. Credit what goes out. So what is happening to my cash? It is coming in or going out? It is coming in. So I will debit cash. So okay. So I will not consider this credit transaction here. Okay. Here again, sale of goods. It is going out or coming in? It is going out. So I will not consider debit transaction. Take up any entry. It will have one debit and one credit. In simple journal entry, one debit and one credit. So here this should be, cash should be debited according to the real account rule, and sale of goods should be credited according to real account rule. Okay. What is coming in? Cash. Cash account debit. Credit what goes out. What is going out? Sales. To sales account. To sales account. Okay. So now moving on to the next transaction. Next transaction. Next transaction is again on December 5th, purchase goods from Mohan on credit. Business has purchased goods from Mohan on credit. Business is purchasing goods from Mohan on credit. Mohan, see, business is purchasing goods on credit. What is happening? My goods balance is increasing. It is increasing. I cannot write goods here. I should write the reason. What is the reason? Purchases. Purchases. So I will write it here as what? Purchases. Okay. My goods, purchase of goods is increasing. My goods balance, because of purchases, what is happening to my goods balance? It is increasing. Goods are asset. And business is purchasing goods on credit. So it has resulted in the creation of a liability, debt. Okay, it has resulted in debt to the business. D-E-B-T, debt. Okay, so business is purchasing goods on credit. From whom? From Mohan. So it has resulted in the creation of what? It has resulted in the creation of the liability. My liability is also increasing. So increase in liability should be what? Should be credited. For capital and liabilities, the rule is similar. Increase should be credited, decrease should be debited. So what is happening to my liability? It is increasing. So what should I do? I should credit according to modern approach. Now I am purchasing goods. Goods are assets. Increase in assets should be debited, decrease should be credited. What is happening to my purchases? It is increasing. So what should I do? I should debit. What is happening to my goods because of purchases? It is increasing. So what should I do? I should debit. So what is the date of the transaction? December 5th. Okay. So what is the transaction? Purchases account debit. Purchases account debit to Mohan account. Purchases account debit to Mohan account. Purchase goods on credit. Okay. So this is the narration. Purchase goods on credit. How much? What's the value of the goods which is being purchased on credit? Rupees 4,500. Rupees 4,500. Now let me solve the journal entry with the help of the traditional approach. Under traditional approach, there are three golden rules of account which you have to follow: personal account, real account, and nominal account. Now business is purchasing goods on credit. Business is purchasing what? Goods on credit from Mohan. Okay. So what is the take aspect? What the business is taking? Goods. Take aspect. Who is giving these goods? Mohan. Okay. Mohan is the giver. Take aspect is goods. Give aspect is Mohan. Okay. So here give aspect is Mohan. Mohan is a person. Who is Mohan? Mohan is a person. Is a person. What are goods? Goods are my assets. Goods are my assets. Mohan is a person. So which account rule we will follow if it is related to persons, artificial persons and representative person? Personal account rule. What does personal account tell? Debit the receiver, credit the giver. Okay, I cannot write goods here. Goods are being categorized as purchase, sale. You are aware of this. Instead of goods, what am I doing with the goods? I am purchasing. What I am doing? I am purchasing goods on credit. So I will write it here as purchase. Purchase of goods. It is related to goods only. So it is asset. For assets, which account rule? Real account rule. What does real account tell? Debit what comes in? Credit what goes out. Debit what comes in? Credit what goes out. Now, debit the receiver, credit the giver is the personal account rule. Mohan, he is receiving or giving? He is giving the goods or he is receiving the goods? He is giving. So I will credit this. I will credit what? Mohan. And what is happening here? Here, debit what comes in? The rule says debit what comes in, credit what goes out. And business is purchasing goods. It is coming in. So I don't consider this credit aspect. So what should be debited? Purchases. Purchases account debit. What should be credited? To Mohan account. To Mohan account. Okay. So this is the transaction. This is the journal entry. Now moving on to next. Now moving on to the next transaction. Okay, sold goods to Sohan on credit rupees 5,000. First I will solve with the help of modern approach. Sold goods to Sohan on credit rupees 5,000. Now business is selling goods to whom? To Sohan on credit. So what is happening to my goods balance? It is decreasing. liability is equal to assets. So purchased goods, sold goods to Sohan on credit, right? Sold goods to Sohan on credit. So what is happening when I sell goods? What happens? My goods balance will reduce. Okay, what happens to my goods? My goods will reduce. Okay, now you are selling goods on credit. So what has happened? It has resulted in the creation of new asset called as debtor. When we sell goods to our customer on credit, okay, it results in what? It results in the creation of debtor. Debtor means customer, from whom we will receive money in the future. From whom we are expected to receive, we have to receive money in the future. So whenever in future, whatever money we should receive, it is an asset. It is an asset. Okay, so I have written debtor also under assets. Here there are two assets, goods and debtor. In future, I have sold goods to customer on credit. He has promised to make me payment after 1 month. So Sohan is what? Sohan is my debtor. Okay, in future I will receive money. So it is what? It is an asset. It is what? It is an asset. Okay, now here I cannot write goods here. What should I do? I should write the reason. What am I doing? I am selling goods on credit. What the business is doing? It is selling goods on credit. Both are assets. As per modern approach, increase in assets should be debited, decrease should be credited. What is happening to my sale of goods? It is decreasing. My goods balance is decreasing because of selling goods on credit. So what should I do? Sales, I should credit. I should credit. See, I am not making here cash sales. When I receive cash, I will write here cash. But here, I am not selling goods on cash. I am selling goods on what? On credit. I know the name of the customer here. What is the name of the customer to whom I am selling goods? Sohan. What is the name of the customer to whom the business is selling goods? Sohan. So I will write the name of the customer. It is Sohan. Okay. Increase in asset should be debited. So when the business, when it sells goods on credit, it will result in what? It will result in the creation of the debtor, and debtor is a asset. Increase in asset should be what? Should be debited. Okay, should be debit. So debit Sohan account and credit sales account. So what should I do? Sohan account debit. What is the date of the transaction? The date of the transaction is December 6th. December 6th. So what is the journal entry? Sohan account debit. Sohan account debit to sales account. Sohan account debit to sales account. Okay, goods sold on credit. What is the narration? Goods sold on credit. It's a brief explanation to our entry. What's the value of the goods which is being sold on credit to Sohan? It is 5,000. It is 5,000. Now let me solve this with the help of what? The traditional approach. What does traditional approach tells? Debit, what comes traditional approach? Okay, there are 3 rules of account which you have to follow. Personal account rule, real account rule and nominal account rule. Now here business is selling goods on credit. Business is selling goods on credit. So to whom business is selling goods on credit? To Sohan. Sohan is what? Sohan is a debtor, customer. When you know customer name, sorry, you should write the customer name. Okay, it has resulted in the creation of the debtor. And what is happening? My sale of goods. There is a sale of goods. I cannot write goods here. Instead, what I should write? I should write the event name. So what is happening? Sale of goods. Sohan is a debtor. He is a person. Personal account rule you have to follow. Sohan is a person. Personal account rule. What does personal account tell? debit the receiver, credit the giver. Okay, sale of goods is a asset. So which account rule? Real account rule. What does real account is? Debit what comes in, credit what goes out. Credit what goes out. So here, now analyze the transaction, whether it should be debited or credited. Take up any transaction, it will have two accounts. Which are the two accounts? Sohan and sale. Now business is selling goods to Sohan on credit. So the rule, if it is related to persons, personal account rule. Debit the receiver, credit the giver. Now Sohan, he is receiving the goods. Business is selling goods on credit to Sohan. So he is the receiver of the goods, right? And what is happening? You are selling the goods. Due to this, what is happening? What is happening to my goods? It is going out. So I will consider credit transaction from this. Okay. So what should I debit? I should debit Sohan account debit to sales account. What should I credit? I should credit sales. This is as per the traditional approach. Okay, now moving on to the next transaction. Now moving on to the next transaction. Next transaction is paid wages rupees 4,000. Business had paid wages. How much? Rupees 4,000. So according to modern approach, I will solve first. Paid wages. So capital plus liability is equal to what? Is equal to assets. Now business is paying wages. So what it in the form of what it will pay wages? It will in the form of cash. So cash is an asset. So what is happening to my cash balance? It is decreasing. It is what is happening to my cash balance? It is decreasing. Okay. And what is happening to my capital? My capital is also decreasing. Why? Because of the payment of the wages. Because of payment of wages, even my capital is declining. But I cannot write capital here. I should write the reason for which my capital balance is declining. What is the reason for which my capital balance is declining? Wages. Wages. Okay? Wages. Now, here for capital, for declining capital should be debited. Decrease in capital should be what? Should be debited. And for assets, and my cash balance is also declining. Decrease in assets should be credited. Should be credited. So, what is the journal entry? What should I debit? What is the date of the transaction? Date of the transaction is December 7. December 7. Wages account debit. Wages account debit to cash account. Wages account debit to cash account. Amount is how much? Rupees 7,000. So narration, paid wages. Paid wages. Okay. Now according to the traditional approach, I'll just explain. Okay. Now business is paying wages. Okay. So what is happening? Cash. What is the take aspect? Business is receiving service. Okay, what type of service? It is receiving service and it is paying wages. It is receiving what? It is receiving services for which it is paying wages. It is paying wages in the form of what? In the form of cash. It is paying wages in the form of what? In the form of cash. Cash is a asset. Cash is a asset. Okay. Debit what? Comes in. Credit what? Goes out. Credit what? Goes out. Okay. Now here, business is paying wages. It's an expense. When it is related to expenses and losses, cash is an asset. So you have followed which account rule? Real account rule. Now business is paying wages. it is an expense to the business. For expenses, losses, incomes and gains, which account rule you will follow? We will follow nominal account rule. What does nominal account tell? Debit all expenses and losses, credit all incomes and gains. Debit all expenses and losses, credit all incomes and gains. Business is paying wages. It's an expense to the business. So I will consider debit aspect from this. Okay. And here, what is happening to my cash? Business is paying wages in the form of cash. It is going out. Cash is going out. It is not coming in. It is going out. So what I will do? I will consider the credit aspect from here. So what should I debit? Wages. I should debit what? Wages account. What should I credit? I should credit cash account. Okay. So any of the method you can follow, either traditional approach or modern approach, but you will arrive at what? At the same answer. And next is sixth transaction. So six transaction I have solved in this video, and remaining this one transaction I will continue in the next class. Thank you.